Nothing much to do, discuss about. But again, I would probably expect that even with this gap up of 125-30 points, we should probably be mellowing up. I think maybe in the first half an hour, first 1 hour. I don't expect a major follow through up move. I think broadly we're just consolidating at the 22,500 mark. We were down 150 points from this range of 22,500, pivot point of 2,500. I think we should try and make a comeback to that 2,500 mark and just try and consolidate over there. The sector point data is also a bit more differentiated. For example, in the Nifty 50 stock patterns, we were looking at 55 to say 75% broadly of the number of stocks which are now trading sub their 50 to 20, 50 and 100 moving averages. The mid caps and the small caps, the percentage is still on the higher side. We have almost 88 to 90% of the stocks in the mid cap 50 and the small cap 50, which are trading sub their 50 and the 100 moving averages. So, it's more of a theme where we are looking at large cap stocks to maybe try and show some bit of outperformance, and those mid cap names largely, I think, could try and underperform.
Naresh, hi, good morning. What's your sense? You think any sort of gain or rather uptick this morning is going to get sold into once again?
So would expect it to hold on for the day, and overall we are trying to make a base formation here at 22,200, 300 and 22,800 is where we should go and test over the next few sessions. It's only post 22,800 is where we get into a case of a stronger pullback across the broader markets as well. So for now, base building is there. We are slow and steady around this area. At least the volatility has trickled down.
Okay. Volatility has trickled down. That's all right. But is it going to be banks? Could it be IT? For me, the last week trade essentially were three. Number one, the small cap index was down 4%. 4% down for the index. Now that's a sizable sort of reversal in the small cap space, which did make an attempt to come back, and we're only looking at 4 weeks. Second, the IT index saw churn, which is IT stocks were down, money moved back into banking, and I think it's visible the way how last week the IT index plummeted. So Kunal, this trade of money moving out of IT, moving into banks, I think it's getting more and more pronounced now. Could it get more and more visible now?
I think it is going. It is very much visible, Nikunj, because what we've seen right now is that last 1 week, 10 days, the Nifty IT index has corrected, I think, by 7-8%, and many of the stocks have corrected almost double-digit, 10% odd. Whether it's large cap names or mid cap stocks, they've gone through a very sharp correction. Many of these stocks, they were trading much above the long-term moving averages for the first 3-4 months of the market correction since September 2024. But I think now these stocks are now almost 10% below their long-term moving averages. So there has been a sharp reversal of price trends for many of these large cap IT names. And to offset that, I think the point which you made, that yes, private sector banking names, they are the ones which are showing signs of strength. You've seen likes of Kotak Bank, for example, large cap names, HDFC Bank remaining more range bound as well as slightly with more bullish tinge. So I would believe that this texture would continue for many of the sector related themes, where you might see churn from one sector, which is the IT stocks, and moving into the banking names.
Okay, moving into the...
If you like this video, then like, share and subscribe to ET Now.